Welcome to my channel, everyone. Thank you for tuning into this video. It's going to be a volume analysis video where we're going to go over how to use volume properly, what to look out for, basically the mechanics of volume itself in the market, as it's the most leading indicator ever. We're also going to go over some market context along with a couple of setups on how to properly enter and exit based off of a simple volume analysis. So if you do enjoy this video and you do enjoy my content, all I could ask is if you could just drop a like on this video and also follow me on Instagram. It's a very good trading resource. I post daily trading recaps along with trading tips and tricks. Link to this will be in the description below. Definitely missing out if you aren't following it. So without further ado, let's get right into the video. This is the pre-market plan today on the S&P 500. I post in my Discord room every day. So in short, we had the S&P 500. We have supply at the 3812 to the top of pre-market highs. We had demand below. We were watching for dips to get bought, but demand never triggered. So in short, if you've been following me for a while, or if you're new to the channel, a supply imbalance or a supply zone is an area on a chart where the market has a high probability of reversing because of the past price action where the market was imbalanced and the equilibrium was imbalanced to the sell side if we're talking about supply. So the idea here is to short the market, long puts at supply for a high probability, low risk area where the market's going to turn. And as you can see, the supply imbalance worked very well today for about a 20-point drop to the downside. Now, how does this relate to volume? Well, volume and price are the most leading indicators you can use. As you can see, I only use indicators that have leading aspects to it, meaning they're not lagging behind price. So this is a custom volume indicator that I have here. I have linked this in the Discord room, and I have also made a video on it as well. But essentially, this is different from the normal buying and selling volume that we have standard on other platforms, because the standard on other platforms change the color to the candle as the color of the volume candle to the color of the candlestick on the time frame chart. This volume indicator changes the selling or buying pressure depending on the tickets that come through on the time and sales. So really fast, I have tons of videos on this. I also have tons of videos in the course because this is my main trading strategy. But in the market, there's a buyer for every seller and there's a seller for every buyer. There are technically 4 participants in the market, but only 2 can make a completed transaction. So we have passive buyers and we have passive sellers, and we have aggressive buyers and aggressive sellers. For a transaction to complete and for price to actually change, we have to have an aggressive and a passive order meet. They are the yin and yang. They complete each other. So when the market is coming down off of a supply zone, at supply we have passive sellers, and if it's met by aggressive sellers, hence sellers removing liquidity from the market is going to come down. So what I want to mention here is for every seller there is a buyer. Now people are going to ask, I get this question all the time, how does the market move if there's a buyer and seller for every transaction? If there are more aggressive sellers than passive buyers, the market is going to come down. So in this case, the market dropped pretty aggressively, and you could see it from this volume here. Again, volume is the most leading indicator. It tells you the story. It gives you a gauge to buyer and seller interest. And with this indicator, you could see the pressure of the tickets on the time and sales. So we rejected supply and volume came in heavy. You take this trade short in supply, you put your stop above the high, your stop above the supply zone, which is confluent with pre-market highs as well. But one thing I want to mention here on how to use volume is that this move was caused by a sell imbalance. So as the market is coming down, if we don't look in hindsight, this looks like, the next biggest sell-off, the market's going to continue going lower and we're going to crash. If you use volume in your analysis, and volume has to be used with context, meaning you have to use other indicators with price, basically the market, you have to read its story in context, you have to comprehend it, and then you use volume to complete your analysis to give you confirmation, whatever the case may be. So a huge volume spike to me is a big red flag for a reversal if there is no follow through. A lot of people say, oh, you want to see volume confirming this move, but they don't use it in context. If volume is coming through with a move, but price is not going to continue going lower in this case, what that's telling me is you have an aggressive seller hitting the market right here, providing liquidity for a passive buyer that is absorbing all of these aggressive sell orders that are coming in and dropping price. And we can validate this, and we know this for certain by this huge candle right here on the volume. This is a significant amount compared to what we've been seeing. It's almost more significant than the first candle, and the first candle of the day usually always has the most volume. So huge volume with no follow through. I want to say 90-80% of the time means a reversal is imminent. So a lot of people see volume, they think they're going to hop on this move, they're going to sell the market, make it continue lower, when in reality they're providing liquidity. They're actually removing liquidity from the market from a passive buyer who is looking to leverage in their position for a move higher. And as you can see, let me just extend this. This move reversed by just a simple volume analysis. Price came down, heavy volume, but price cannot continue lower. If we can continue lower with increasing volume and price does not stall out or reverse up, that move is going to continue going to the downside. But the fact is that we had volume and we cannot have any follow through to the downside. You had buyers or you had sellers giving up, and you had those sellers providing liquidity for those buyers for a nice reversal back up. And we actually reversed perfectly up into the supply zone that we created this morning. So because of this move down, this area, which I'm just going to mark as an oval instead of a rectangle, created supply, and boom, we rejected the supply as well after a retest. Supply inside of supply. Again, you have to use it in context. So on a 5-minute chart, this volume down here at the low is not very significant. We did reverse end of day, but if you go to a 15-minute chart, you're going to see this volume looks very significant. High volume does not always mean a continuation move to the downside or upside. Next example is on ticker SNO. This is a trade that I took with supply and demand confluent with a very simple volume analysis. If you guys are still sticking around, you guys are still listening, and you're enjoying this video, learning something, please just take a second, 2 seconds, smash that like button for me. I'd really appreciate it. But this trade on SNO is very simple. So we've been watching this buy imbalance for the past week, ever since we did the Sunday night live charting with members. We charted this 269 zone out at the buy imbalance, and we've been waiting all week. It took until Wednesday for the zone to trigger. Thursday, the market opened, and this was in the pre-market plan. We were watching for price to rally out of the 269 level. The market opened up, and right away, if I go to the first 5-minute candle, we saw significant volume compared to what we've been seeing. So this is Thursday right here. As you can see, the volume over here is much higher than what we've been seeing the past 4 days in the week. So right then and there, red flag, not a red flag, a white flag or a green flag for profit in this case went off in my head. And I said, there's people buying this. The market sold off at the open. It immediately got bought up, as we could see a nice lower wick here. And then I took it long over 275. My stop around 271. And as I was watching this, the 300 strike calls on SNO were piling in. So you're not going to see it now, but the volume as SNO was moving down and it was moving up, the open interest and the volume was just pouring in higher and higher every time we would move. And that was just telling me you have eager call buyers and eager participants confirming it with the volume, and price rallied pretty much the whole day. I was focusing on a 15-minute chart as there was less noise, as the immediate trend was super bullish, and I got it out full position. As soon as we stalled out above 300, we could not hold above it. I sold my full position. Fortunately, we rallied, but you can't look at it like that. And today we opened up, made a nice move into a supply imbalance, and where we double topped, got nice confirmation. You had people buying this move up today, as you could see. They try to compare it to yesterday, and I stress this all the time. Today is not the same as yesterday, and yesterday is not the same as today. So people saw a gap up on SNO. They wanted a continuation move to the upside. Yes, we did rally about 12 or so points to the upside, but if you don't know we're in a supply imbalance, you were to take this trade long, and you would have got, completely demolished from a nice sell-off from the sell imbalance up here. We eventually double topped and had a pretty much nice all-day sell-off. Here we have Roku, and this is how you have to use volume in context, meaning you have to understand where price is, and is it at a significant level? Is there a huge move down, huge move up? Are we chopping? Are we in the middle of a range? So here we have Roku, and we had a significant volume spike in the middle of the trading range, attempting to break not all-time highs, attempting to break the high of day with a huge volume spike down here. Now this was in the middle of the range, so there's no real story here. So if you see a volume spike, the market's not giving you any clues. We're in the middle of a range. We're moving completely sideways. And yes, we have a huge volume spike, but there's no real data or there's no real information that we can get out of this. Now, Roku a couple of days ago, where we were moving up, we had very strong buying interest this morning. And as you can see, as we continue to move higher, we get increasing volume. So at the point where we have our highest volume spike, we want price to continue after. If it does not continue after higher volume, that is telling me the buyers or the sellers are absorbing the buy orders and price can reverse. But we have follow through. Price does not stall out. And yes, we get a little bit of a pullback, but this thing rallied very hard following that, huge volume spike. That was the second highest one of the day. And that was, 20 or so points from the low. So you have to use it in context, not just in the middle of a range or, anywhere on the chart. So I hope you all enjoyed this video. I hope you all learned something. If you did, hit that subscribe button, hit the like button, and also follow me on Instagram. See you all at the next video.